Good morning and welcome to Equity Story Trade Watch, 1st of July 2022. New financial year is upon us, and it was a pretty bad first half of the year. I think the Dow had the worst in like 50 years or something since 1960. So you can see it's a really, really difficult market. However, today we're having a bit of a bounce, even though last night the markets in the US weren't good at all. So a little bit of a relief rally with the 1st of July coming through. How long that lasts, we can go through next week. About to find out, I suppose. But I don't have any conviction, unfortunately, for this market. So we're just going to go with the announcement and what we're going to hold the line. So before I go on with anything else, disclaimer in front of you, talking about general advice, warning only. Of course, everything we talk about on videos, particularly on Trade Watch, is definitely all about general information only. Nothing personal has been taken into account. So let's move on to have a look at some of the screens and some of the announcements that's been coming through. And really not great news this morning, I have to say. A lot of these things, well, small companies have been coming out with lackluster type profit warnings, downgrades, all these sort of things that didn't quite have a good look for the 1st of July. So anyway, we'll go through some of these. At the end, I'll speak about a couple of stories that I'm thinking that could potentially have a better time ahead. But let's start with the stuff that hasn't been doing quite well. So one I've got here is OEC that you can see in front of you. Just having trouble with the Boeing, the contracts that they had to let go because Boeing pulled out and so on. So this is not a great chart. I just wanted to quickly mention, of course, that it's just not going well, so you just can't touch it right now. There's still an inkling of me sometime down the line, maybe a year or two away, because it does have a very, very nice product with that orbital engines, but overall, you can't touch it at the moment. Next one is OPY. So I'll quickly go to OPY. I suppose it's good and bad news in a way, but generally speaking, it's pretty much getting out of the US with the tail between its legs. However, I suppose when you look at it, this industry has been completely shellacked, right? We've got Zips of the world, Sezzles, you name it. The BNPL space is just dead. However, what OPY has done is they pulled out in the US because it's just too hard over there, of course, for them. We've seen it with all the other players combined. So they're just going to concentrate on Australia, which is maybe the right thing to do because they're going to conserve some cash. But then again, having a small little market like this, I'm not sure that's going to be a long-term sustainable type proposition. Anyway, good news. Overall, it's bad. Don't touch these sort of things. Move on to something else. HT8, another one. Quickly have a look at the chart here. And I'm looking both weeklies and dailies. I just wanted to show you the charts, how poor they are in both, right? Nothing's really going up. It's all going down. HTA just called out about margin pressure. So again, it's just not great. Some of these stories have been the darlings when we had the pandemic because they were online retailers and things were going quite well. But since then, as you can see, since early 2021, it's just been all a downward swing. So not to be touched. There's much better stories out there. Okay, I've got one that's quite interesting, and I'm just going to quickly mention it, and that is 92E. This is a little explorer in Canada, I believe, in Saskatchewan province, and they are a uranium player. Some of these results, and I'll quickly have a look at the chart. So it obviously had a big fall last week, and a little bit of a jump today. This is on the back of some news. So I'll go back to the news. What do they look like? And I'll quickly enter that here. Just give me 1 second, and you'll see what I'm looking for in uranium, I suppose, because that's, when you're trading you've got to have the certain things you need to concentrate on, especially the grades, to see if that makes any sense. All right, so let's put in 92E and see what the actual announcement states, and we'll go through it and see if I can explain to you what's so good about it. So there's actually, I suppose, when you look at it, there is the one thing that's quite catching, and that's the one of the holes, the 42 meters at 0.5% uranium. In the scale of uranium type hits, that is excellent. I mean, 42 meters is pretty thick for uranium. and 0.5% is pretty good, right? Normally, we've seen a lot of that. Well, when I say normally, a majority of hits that you're probably going to see in the uranium world is going to be in the ppms, which is the 0.0123%, right? This is in the 0.5. So you're talking here 1,000, oh, actually 1,000. You're talking probably getting closer to 10,000 type stuff. So which is good, right? That's exactly what you should be looking. 10,000 is going to be 1%. So you're looking at about 5,000 here ppms, but of course we need more than that, right? We need more than just a one hit. So at least we've got one pretty good hole. Let's see what else that can come up. Canada is very, very good for jurisdictions if you're going to go and mine. And of course, they are very well endowed in uranium as well, with one of the biggest mine in the world from Cameco is up there. So pretty good. That's what you sort of look like. But, you know, I wouldn't get excited yet. I want to see more, but I'm like what I'm seeing from here. All right. So, let's talk about three companies that come out with some announcements. And it's quite interesting to see where they're at the moment. And one of them is ASB. So let me just quickly read out what they actually come up with, because there's two interesting things that actually happened overnight and today. So first of all, they've come up with saying they've been awarded a US Coast Guard OPC contract. And I'll bring that up so you can have a look for yourself. And here it is. You've got a 3.3 billion potential value of the contract for the detailed design and construction of up to 11 offshore patrol cutters for the United States Coast Guard. And the first vessel has been contracted by US Coast Guard with options of further term vessels. So that's excellent news, right? This is like the good old days when they were doing the literal combat ships and the other contract that they had that lasted for 5 to 10 years. So that's good news. Hopefully they can obviously make money. Remember, this is going to be fairly thin margins as they usually are. But that's a good news. They should have now locked in a big portion of recurring, or not recurring, but at least revenues that they can count on over the next period of time. So for investors, that's always a good news. However, on the flip side, there was an article last night talking about some patrol boats that were, I believe, were produced by ASB that were delivered to some of the Pacific nations that now look like they've got issues with those patrol boats. So, how that's going to play out, I don't even know. I mean, we haven't heard much from Austal itself, so we've got to have a wait for that to see what they say. But the Pacific nations obviously have to potentially stop using those boats. And some of the issues they've, I think, came up with carbon monoxide leakage and stuff like this. So, I don't know. I mean, I don't know what the impact will be of this, but at least there is a issue. Maybe is it going to come up with these patrol boats here in the US? I don't know. I mean, this is early type stuff, so I'm just putting it out there. Potential something that needs to be put into the risk category with ASB, because they are, patrol boats. That's exactly what they're going to be doing. Possibly maybe a different design of some kind, but still something here that needs to be addressed that might be an impact in the US. So one to follow there. Let's have a look at the chart of ASB, because of course it has been a pretty bad laggard of late, but with the jump today, it should help it along a little bit. So that's the chart today. But again, I would not be touching this yet. It is, like I said, it is a fairly risky proposition. And in this market, not so sure. At least good news, they're moving up. Maybe with time, the market might get a bit more confident. So this was the weekly. This is the daily. So you can see it jumped above the trends, but no, don't touch this as yet. All right, now two companies that I feel maybe has got a brighter future ahead of it. One of them that's been smashed to smithereens, and I'll put in the actual code right now, and that's FCL, FINEOS. And the reason I'm putting that up, I'm just reading through FN Arenas, one of the brokers, which is Macquarie, talking about FCL and saying that, first of all, they definitely have gone through its earnings and chopped it down a bit. So its price target has moved from 306 to 289. So you can see it's way still above. So they've got their price target around here somewhere above the trend lines. It's half that right now. But basically what they're saying here is, yeah, we still believe in the company. We're expecting still growth to be had. And then they're comparing it to its peers. And this is where it gets interesting, because it looks like it's been smashed way, way too far, right? So it's lost so much value. that looks like now it's in pretty strong value territory. So they're saying here that it is a 75% discount to its peers. And there are a couple of peers they mentioned. I think one was called Duck Creek and the other was called Guidewire. So as you can see, there could be some value here in this story. There will still probably be loss making. It's still going to be high risk. But if you take the long-term view with something like an FCL, right, it's not a broken business by any means. It's actually a good business. You might see better times ahead over the next 3 to 5 years. So something to think about. Potentially over the next few weeks could be a cheeky bid somewhere around, I don't know, 140, 130, 120, somewhere around that, and see how it goes, because it could potentially be lucrative over the next few years. So that's one thing that I thought maybe looks pretty good with a recovery down the track sometime. The other one is a big one called QBE. Now, QBE, again, reading an article from, I think, last night, talking about interest rate. And, we've got the RBA meeting on Tuesday for another interest rate, probably another 50 basis points rise. And this plays into the hands of insurers because they get the premiums, of you and me, then they have to invest that premium somewhere before obviously they have to pay out for any claims they might have. What happens to that cash that they get from people that pay the premiums? They have to invest it somewhere, right? They got about, if I'm looking at the books, and I had a look today at the books, they've got about $30 billion of investments plus cash. Now, thinking logically through this, right? You've got a very low interest rate environment we've had for the last 10 years. So pretty much zero. So really, if they've got any cash in bank, that investment would have been useless for them. Now with a rising interest rate environment, and it's moving pretty rapidly, they should see some impact, positive impact from the investments they've got, that $30 billion they've got. So for me, while it's not an easy business to understand, it's got a lot of moving parts. And of course, with QBE and others in this space like AIG and Suncorp to an extent, you're going to have your ups and downs with claims of, some storm or some sort of events that might happen. This is the environment they should do quite well, where interest rates are moving up, where, say, for example, the banks move the cash rates from 1% or something like that to 3% over the next 12 months. That's tripling what they're going to get on that $30 billion, for example, right? It's something to think about. I think this could be quite an interesting play. So if you're going to take the view that we've got a rising interest rate environment, we've got a potential, say 12 months of this, or maybe 18 months of this, this could do quite well. And imagine we've got a year of low claims that could potentially kill the pig, so to speak. So I'm quite interested in this QBE and Suncorp, of course, to see what we can make out of this as a maybe potential play. And you can see here as well, we've got a buy signal for Monday. So this is why it's getting more interesting. And I'd say Dave will probably have this on his Einsteins on Sunday. So watch this space. Let's see what happens. Like I said, this is probably one of the better plays I've seen for the next, say, 6 to 12 months with the rising. And it's inevitable that interest is going to rise. We're predicting it's going to be probably 12 months. If that happens, like I said, these guys should do okay. So that's the couple of things that I just wanted to mention, those two potential stocks. Other than that, we've got a still fairly tough time ahead. So I would not be jumping around too much and try to trade, because this market is very, very difficult to trade. I'm just looking for that opportunities maybe for a longer term type investment and some that I can see maybe will benefit out of this environment that we're going to be in over the next, say, 12 months, right? So FCL maybe for the long term, QBE for the maybe 12 months type play, that could be something that we need to have a think about. All right, on the back of that, because I'm doing the videos today on my own, because Dave is flying to Brisbane for the CTM course, which should be exciting over the weekend. Please join me for Ask the Analyst today at 12. I'll do it on my own, no problems. So we'll speak about all the stocks. We'll go through their charts. We'll go through, of course, any questions you might have on the stocks and anything else you might want to comment on. So thank you very much again, and I'll see you probably about in an hour and a half. So cheers. Have a good day. If I don't see you, have a great weekend. If I do, see you at 12. Cheers.